In this video I'm going to explain you how I use a TPO and order flow for day trading. Essentially, you can project the TPO in two ways. Either you can plot it as a composite, like you do it with the volume profile, or you can plot it in a split form, showing the TPO blocks on each candle. This is a 5-minute intraday chart of the E-mini, showing the entire US main session of 17th of July. The TPO differs from the volume profile because its main pillar is time, which forms a constant in between the two variables, price and volume. In general, it measures two kinds of market situations. It measures where the price has spent the longest time via the point of control, and where the price has spent the least time on this chart on the left hand side, showing the TPO blocks just forming one row. This is also called a single print or imbalance zone, which means that big market participants have moved the market aggressively. I call this a macro zone because big market participants have already defended this zone once. A second macro zone we find on the level of the POC, because this is where value have been built. Prices mostly like to return to the levels where the most orders have been given and transactions have been processed. Looking at the next RTH, we see price approaching macro zone 1. And this is probably many retail traders have traded the breakout out of a trading range. There might be another group of traders taking a long position when the opening gap got almost closed. If you see prices approaching an important macro level, you could go to the small intraday chart to study the order flow. And what do we see on the order flow? When prices hit the macro level 1 the first time, we didn't get any signal from the TPO. But after hitting the level the second time, we see a new single print zone on a micro level, and have a look at the order flow when price approached this micro level again. So when prices hit the macro zone for the second time, we see sellers coming in with imbalances on the order flow. As a day trader, you always have a few choices. Either you act aggressive, or you act in a more defensive form. Depends from your trade management, how many lots you are trading, your contextual thinking, and so on. So when you saw that prices could not cross the imbalances to the upside anymore, and you decided for a short position, you got the start of a nice downtrend. There was another profitable opportunity when prices hit the macro zone number 2. Creating a bounce back from a new microzone, with the order flow showing absorption. All in all, a profitable day for a day trader using TPO and order flow.